Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES made a marginal low below Friday's low, and from that point on, responsive buyers have been active and ES has been balancing within a range. Heading into the open, we have the initial support zone at 78 to 80, and if the buyers are going to defend and step in, then ideally we see the market holding above 78 to 80. Below that, we have the overnight low at 77, and then support at 73.5 to 75.5, which marks the balance area low from a week or so ago. So the buyers technically can still step in at 73.5 to 75.5, and as long as that zone's holding, there's still potential that we could be stuck in a balance and in a range. In the event of a breakdown below 73.5 to 75.5, that would signal sellers in firm control. And in order for a sustained breakdown, we are going to have to see a lot of weakness on the internals, sustained downside momentum, and the advanced decline line at a fairly weak level and trending lower, as well as participation from the other markets. So absent any heavy selling, we can still get responsive buyers active at the 73.5 to 75.5, and potentially even here at the 78 to 80 zone. On the upside, we have pre-market resistance at 84 to 86, and a break of that zone would be needed to confirm buyers stepping in even on the smaller time frames. So if we can get a breakout above 84 to 86, then that would bring the 2090 and the 91.5 to 94 initial resistance zone into play. And on first test, sell side can be active there. Beyond that, we have the resistance at 97.25, 99.25, which marks the bottom of the 3-day balance area that we recently broke down from. So that's a pretty high probability zone for sellers to be active, and by that point you would be exhausting the range as well. So the expectation is not for the market to necessarily reverse all the way back up into 97.25, 99.25. The more likely scenario is that even if we do get buyers active here and they still defend the market, 91.5 to 94 would be a higher probability target. And then on the downside, we just have to be on the lookout for a false breakdown. So like I said earlier, in order for the market to really put in a sustained breakdown, we have to see a lot of weakness on the internals, a lot of sustained downside momentum, and absent heavy selling, it's going to be a market where it's risky to initiate shorts at too aggressive of a price. So on the downside, even if the market pokes below the overnight low, unless it's doing so on heavy volume, heavy downside internals, technically buyers can still be active. Now, for those reasons, our short-term bias heading into the open is neutral. But in the event that the market does break below 73.5 to 75.5, our bias would shift to bearish, and from there, ES can go down and tag the 66 to 68.5 quite easily, and potentially even 60.25 to 62.75. And that is still a high probability zone where responsive buyers can be active. So in the event of a breakdown, the 60.25 to 62.75 zone is still a spot where responsive buyers can step in. You'd also be exhausting the range heading into that zone. So that would be a good spot to initiate a long, even if we do get a breakdown. And then if we are seeing a lot of heavy momentum on the downside and the market is breaking 73.5 to 75.5, intraday we can also try to get on board on the downside. So right now, heading into the open, short-term bias is neutral. We're open to a directional move either way. Either buyers defend here and then we break out above 84, 86 and then tag 90 and 91.5 to 94, or if the market is showing a lot of broad weakness and sustained downside momentum, then we can break down and possibly test the 66, 68.5 and potentially 60.25 or 62.75. So we do have to approach this market with a fairly neutral bias and mindset, and be flexible intraday depending on how the market sets up. So those are the main ideas heading into the open. Let's see if buyers can defend the 78 to 80 area or 73.5 to 75.5. That is going to set the tone and the bias for the day, and we'll take it from there.